Right now, it's my honor to introduce to you the session chair, followed by the speakers. And as I introduce them, I'd like each of them to come and take their seats on stage. Session 4 is all about the role of financial sector in economic growth. I'm delighted to introduce our chairman of this session to you, who is Mr. Damith Pallewatta, the Chief Executive Officer of Hatton National Bank PLC. Prior to his appointment as CEO, he was Deputy General Manager, Wholesale Banking Group. He holds a Masters of Business Administration from the Postgraduate Institute of Management, University of Sri Jayarathna. Let's put our hands together for the session chair, Mr. Damith Pallewatta. And as our session chair joins us, let me also introduce to you our first speaker on this session, Dr. Anil Perera, the Director of the Domestic Operations Department and the Deputy Secretary to the Governing Board of the Central Bank of Sri Lanka. He has held the positions of Director of Economic Research and the Additional Director of Domestic Operations. He received his Master's of Social Sciences degree in Economics from the University of Kelaniya, and he holds a doctoral degree from Monash University, Australia. Let's put our hands together for Dr. Anil Perera. Our second speaker to join us in this session is Mr. Indika Ranaweera. He holds the position of Vice President for SME, Middle Market and Business Banking at NDB. He has a distinguished career spanning over 25 years in the banking industry and has comprehensive expertise in branch banking, SME credit, portfolio management and credit risk. He has a bachelor's degree in civil engineering from the University of Moratuwa and a postgraduate diploma in MBA and a master's of economics from the University of Colombo. Let's put our hands together for Mr. Indika Ranaweera. And our final speaker for this session, we have Rear Admiral Y.N. Jayarathna. At the time of his retirement, he was the Chief of Staff and the Chief Hydrographer of the Navy, as well as Joint Chief Hydrographer to the government. He chaired the North Indian Ocean Hydrographic Commission, consisting of 12 member states. He holds 2 master's degrees from the University of Kelaniya for Defense Studies and the University of Goa for hydrographic surveys. So with this, let's now welcome our third speaker, Rear Admiral Y.N. Jayarathna. Let's put our hands together, ladies and gentlemen. So this is session 4, the role of financial sector in economic growth. I'd now like to hand over control to our session chairman, Mr. Damith Pallewatta.
Thank you very much. Thank you, OPA, for arranging this session on role of financial sector in economic growth. I think it's a very important session. There can be multiple perspectives that we can bring in through the presentations as well as the Q&A session following. So how have we planned the session is 3 speakers will come up and do a presentation for about 15 to 20 minutes on the selected topic. After that, we will start the Q&A, more to engage the audience and bring in whatever the crux that they have been presenting on the financial sector contribution to the economic growth. We have witnessed how the financial sector has undergone tremendous challenges and stood the ground, which has supported the economy in multiple ways in resurrecting from where it was. So let's hear it out from the speakers on different perspective of what has happened to the financial sector and what contribution it can do for the growth. Let me first invite the first speaker to speak about the role of financial markets towards a sustainable economy. Dr. Anil Perera, Director Domestic Operations and Deputy Secretary to the Governing Board, Central Bank of Sri Lanka. Over to you.
Very good evening to you all. Thank you very much, OPA, for inviting the Central Bank to make a contribution at these annual sessions, and I'm also happy to join the esteemed panel chaired by Damith. So I think this session, we have seen a lot of important sessions during the day. Even the previous session, it was a very interesting one. So this one, we try to make it very interesting. One of the I think, essential and important areas. The financial sector. So we are discussing under the broader theme of financial sector, the role of financial sector in economic growth. So in this session, we will be discussing on the role of financial markets towards the sustainable economy. Now I think this sustainability, we all know, it's like a very fashionable buzzword. We all talk about it. And if you look at the real, the basis of this idea, it's actually coming from two areas like the innovations, environmentalist quotient and the innovation in terms of technology. But we mainly talk about sustainability in terms of the environmental aspect. But I think we all agree this is like a must in the current context. So when you look at the growth aspect, what we really see, the sustainability is related to some socio-economic and environmental goals of the society. So when we talk about technically in terms of economic growth, what we would try to achieve is like some long-term growth without having some short-term volatilities, business cycles. We are trying to reach the long-run potential and long-run growth of the economy while preserving the resources for the future. So the idea of sustainability, we are trying to consume today while keeping some space for the future as well. So what is the importance of a financial sector in this regard? Now here we see some evidence, coming from the central bank, we bring a lot of charts, don't worry. But still what we are trying to emphasize here, in reality, in terms of evidence, econometric or empirical evidence, where we can see a close relationship between finance and growth. So there are arguments whether which causes what, chicken and egg problem, but we all agree a developed financial system is a very important ingredient for long run economic growth. So starting from many politicians like Gladstone to economists like Schumpeter, and also financial economists in today's context like Beck, Levin, they all very clearly articulate a relationship between finance and growth. And actually we have seen from some of the recent examples like countries like Malaysia and Latin American countries like Brazil, we see how the finance has played some important role in driving long run economic growth. So why it matters? If you look at the financial market, in terms of capital allocation, in terms of taking risk, in terms of determining assets, which means price discovery process, and also in terms of taking investor decisions, the financial system is very important. Now when you talk about sustainable growth, why it is important, the financial sector is an important element that would support environmental and social goals as well, including some of the key areas that we talk about today, green financing, socially responsible investing, and social inclusion. So in terms of the role of the modern day financial markets towards sustainable growth, now when you look at a lot of discussions and also what really has happened practically in countries, we can see certain elements or some prerequisites which are required to support the long-term growth. So recently OECD, they came up with some of the prescriptions in this regard, and also when you look at the Sri Lankan context, especially the ADB, they have basically formed some of the policy recommendations in relation to the Sri Lankan markets. So having, considering all this, I basically picked up 6 areas that we should have some focus in relation to supporting sustainable growth in Sri Lanka through the financial markets. What are these areas? Basically developing the capital market and promoting sustainable finance, harnessing digital finance, streamlining public finance and public debt management, promoting financial inclusion and social protection, and also one last thing, introducing long-term financial products or alternative financial products for our usage. Now, very briefly on each and every aspect, now we know the capital markets, they are basically coming with or providing long-term financing for economic activities. So efficient markets will enable access to finance as well as price discovery, competitive prices we can enable products, and also in today's context we talk about financial stability and inclusion as well. Now, if you look at the global scenario, it's very clear the capital markets have undergone tremendous changes, especially if you look at this chart from OECD, you will see while there is a steady growth in corporate debt markets, there has been an exponential growth in sovereign debt markets. Now, also, there are some profound changes observed in terms of these markets, or these funds are basically driven or channeled towards like decarbonization, aging population, and technological advancements, etc. Now, if you look at the Sri Lankan context, it's very clear what we see, our capital markets are not that deep enough or large enough. We know we have a sizable government securities market, but if you look at our corporate debt markets, they are actually at a very premature or very insignificant stage, I must say. So if you look at the issuances of the corporate debt per year, only the banks or some few institutions are focusing on corporate debt, but it's very few by the other entities. In terms of sustainable finance, as we know, there is a growing demand elsewhere or in worldwide in relation to these ESG factors. But again, if you look at the Sri Lankan context, now the good thing, we have already basically embarked on a journey towards sustainability and sustainable goals and sustainable finance even. Central Bank has introduced a taxonomy and also a roadmap. And what we observe, I think there is a slow kind of an adjustment or move towards that direction. So where the world we have seen, there is a kind of a significant increase in terms of these green finance, sustainable finance products. Now, some numbers say by 2023, 4.3 trillion USD was the total portfolio value for sustainable finance products. But in Sri Lanka, we know it's actually at very early stages. Third aspect, digital finance. I think we have a session, Ms. Indika he will basically deal with this in detail. But what I wanted to say, now we know in Sri Lanka, banking penetration is very high. Some estimates say 75, even 84 range. Compared to India, we have some high bank penetration. But if you look at digital penetration, actually we are at very low, maybe due to lack of literacy, digital literacy, fear of taking digital transactions, or the trust. All these issues may have affected, including the language barrier as well. But I think this is where we should move. And again, some research show the digital financial inclusion is a matter of, or a factor of growth. Fourth aspect, I think we all agree and we have discussed enough, public debt management, especially public finance. What we have seen in this country for many years, the development of private debt markets and also private capital is basically affected by large public sector, especially due to high budget deficits, and the way of financing these budget deficits have basically affected the development of an active or deep private debt market. So I think we are basically seeing some changes in relation to government finances and behaviors, and also we are ahead of a kind of a completion of a debt restructuring program. With this, I think we have some ability and some space for us to think about enhancing the public debt management, and also giving some space to create enabling environment for private debt markets, especially by way of reducing uncertainty. We have seen each and every week, especially with the auctions and all that, how uncertain this public debt market is given the large funding requirements of the government. And the fifth area, the financial inclusion and consumer protection. Financial inclusion, again, it's a very new, a kind of a new area, and also, as I said, a fashionable area right now. But I think that is also one of the key areas we should also focus. If you look at the Sri Lankan context, our surveys indicate that actually in terms of financial inclusion, literacy, there are significant weaknesses and lapses. Although we have underscored the importance of this, but I think there should be a kind of a the government-driven policy and efforts to enhance financial inclusion and protection of the financial consumers of the country. Last thing, now I think from yesterday's Ghana's presentation also we realize we are entering into a low inflation regime. So that's a kind of a enabling environment for growth. But at the same time, that creates some challenges also. Having low inflation creates challenges because some people think it's like a disadvantage on the interest earners. For example, when inflation is coming down, what we have to realize is interest rates should come down. So in this country, we have seen interest rates always at double-digit levels in the history because we have been running with high inflation. Always high inflation in many cases before 2009 period, we have seen almost at double-digit levels. So interest rates have to be in double digits. So we have been actually basically enjoying double digits interest rates, especially for our deposits and all that. But I think going forward, we cannot expect that because when you are basically operating with 5% inflation target, obviously we will have some kind of a single rate interest rate environment in the country. So that will basically create some or some, some pressure among the interest income earners. So for them, I think this is the right time through capital markets and also through other markets, we think about some new products. Especially, I think banks should take a lead in introducing such new products. Lastly, so what we have to have in terms of creating the environment for the financial market to flourish or basically to expand. Now, one of the key areas from the central bank's angle, what we think is actually stability. Stability, which means monetary stability, fiscal stability, financial stability. So unless we have some stable environment in terms of the broad economic aspects, we will not see a kind of a developed financial markets. So whenever we see instabilities in these fronts, definitely financial markets will experience instability. So we will not be able to harness the potential of the financial market to support the growth. That is an issue. So there's a clear role for the authorities, both the government and the central bank, to maintain stability on a sustainable basis. And also we have to create an enabling environment for financing the growth drivers. Now I think from the morning you may have discussed the importance of the export, the dire need for us to have export and foreign exchange inflows, and also the role of SMEs. And I think today we talk about these global value chains and servicification of these global value chains, green activities, and also we are looking for a financial city across the port city. So a lot of expectations are with us, but I think these have to be basically realized by way of supporting these growth drivers. Then the financial market will also be activated. Now we can't simply encourage or try to expand the financial market without having these enabling factors. So unless the growth takes place, the finance will also not expand. So there is a kind of, as I said, clear nexus. Third point, I think we have to create an environment for FDI through the financial market upgrades and facilitation. So I think one of the key areas, issues in this country. We have been having low FDIs. I think we always compare ourselves with some countries, even now like Cambodia, Thailand, and also Vietnam, and saying even we don't get a cent of that. Sometimes some people argue. So that's true, because we are having some low inflows of FDI, because I think we have some issues in our market. So we have to create an environment for that. Lastly, I think we all agree the reforms. The reform agenda in terms of legal, institutional, and also policy, operational, all these reforms are required. So I think we are in a basically, from the previous session also, we have seen a whole lot of legal reforms have been implemented, and also we are looking for some certain reforms. So these reforms have to be continued, and also that should be translated to the financial markets as well. So what we have seen, some of these reforms are actually not reflected or not affecting the financial market. So the financial market also should experience these reforms in a tangible way. Then there will be a kind of a cohesive behavior of these, the economy as well as the financial markets. Then such policy reforms will enable basically the enactment of the contracts, financial contracts especially, and also some other related ingredients or inputs that we will basically discuss, we'll be discussing at the Q&A session as well. So all in all, what I can say, the sustainable economic growth cannot only be realized by only some few elements. So the finance is also very important element, especially nowadays. What we talk about is basically the digitally driven and sustainability driven finance is very important. So let me stop at this point, and we will take some of your views and questions during the Q&A. Thank you.
Thank you, Dr. Anil, for that informative presentation. There are very interesting points that I would like to raise maybe in the Q&A session. Financial markets play in very important role within the financial sector that will help forming economic growth as well. Before going to the Q&A, can I invite to the second speaker, Mr. Indika Ranaweera, Vice President, SME, Middle Market and Business Banking in DB, to discuss about access to finance for small and medium enterprises.
First of all, I have to thank the President and the OPA Council members for inviting me, rather giving me this opportunity to address this important gathering. So, access to finance. Before coming into this topic, I just want to give a briefing on SME segment as a country, where are we? So we have about closer to 1 million SMEs, MSMEs within the country. And if you look at the study done by Census and Statistics in 2018, the SMEs in operation were in operation in 79%, rather 80% in operation in 2022 as well. So what does it mean? I think about 20% of the SMEs may be closed down or face difficulties during this pandemic period. So what does it say? I see this as positive, because 80% of the SMEs of the country are resilient, even during pandemic, even during the East attack, even we know now, even during the economic crisis, still the SMEs are surviving. So this conclude, this is a segment, very resilient segment, right? But we'll see when it comes to the access to finance, where are we? And where is SME as an industry, as a segment? So what do you mean by access to finance? Is basically the availability of financial services like credit and loans to individuals or businesses. And also there are so many empirical studies which I'm planning to share, which says across the globe, not only in Sri Lanka, one of the constraints is this access to finance, whether they have access to their credit or their financing. In 2014, the ADB, Asian Development Bank, did a study, and they are also stating the same thing. But they are saying, still, in addition to other complexities, what SMEs are facing, maybe the collateral, maybe complexity, maybe high interest rates. Top of that, access to finance is another constraint. And also, there's another study they say, even in an economic boom, right? In 2014, this study, even during economic boom, still, some of the small SMEs find difficult to access to finance. So, this is actually not only to developing countries, across the globe is a concern. So, if you look at access to finance, is a subset of financial inclusion. We know, I think some may have confusion, what is financial access to finance and financial inclusion. So, financial inclusion is the bigger term where it's look at the business access to useful and affordable financial services. So, we can say access to finance is a subset of financial inclusion. So, even World Bank says for the poverty eradication, the financial inclusion is has to be a key focus area. Also, researchers have found that economic growth, I think Dr. Anil also already mentioned that, economic growth and financial inclusion go hand in hand. If we have financing to the SME segment, that will lead to economic growth. Why we say in Sri Lanka, more than 52% contribution to GDP is from SMEs. So therefore, this is a very important segment. But we look at some of the statistics, right? If you look at, these are in IFC did a study in 2017. So that says, if you look at total financing, out of the total financing of a particular country, what is the percentage to SME segment? If you look at South Korea, it's around 80%. That is, most of the financing goes to the SME segment. If you look at Malaysia, it's about 50%. Thailand is about 50%. But if you look at South Asian countries like Indonesia and Sri Lanka, which is actually at the lower end. So this shows there's a constraint to access. I think there's a real challenge for the SMEs in the country if you look at access to finance. And also there's that particular slide is missing. There's another finding by IFC in 2017. They say, if you look at SMEs, the finance gap. So that means out of the requirement of the SMEs, how much they are getting the financing. So if you look at Sri Lanka, it's only 21%. Right? There's a finance gap of 21%. If you look at India, it's around 11%. So that means out of the total requirement, SMEs in the country not getting 21%. But if you look at other countries like India, it's around 11%. If you look at Pakistan, it's about 16%, where Thailand is about 10%. That also says SME is not getting the required financing for their expansions or their business growth. And also, if you look at this particular graph, this is from the for IBSL. This shows the financial institutions' willingness to lend to each category. So we can look at overall the retail, corporate, and SME. If you look at there's a positive trend. This is actually 2024 statistics that shows SME segment. The financial institutions see a positive trend, so they are willing. Willingness has increased towards the third quarter, or rather within the year. But same time, if you look at the demand for the loans by this segment SMEs, it's around index, let's say out of 100, is around 40%. So I see here as a positive trend. because the finance sector has identified this is a segment to finance, because this shows by these statistics. And also, the study done in 2021 by Asian Development Bank, so they say the commercial bank branches per 100,000 SMEs or adults, let's say. So we are around 18.6%. So comparatively, Southeast Asian countries, we are in par. But of course, though the number is low as a percentage compared to other countries, but this is a good trend where our financial inclusion percentage is high. Though the access to ATMs are low, but access to commercial bank is actually we are at a better rate. Same time, if you look at number of accounts handled by the adults, the 15 years and above, so there also we are above the Southeast Asian countries. So that means what? As a country, I think Dr. Anil also mentioned, when it comes to the financial inclusion and financial literacy, we are above some of the Southeast Asian countries, rather some of the competitors. But if you look at overall, in the Asian countries, there are 2 trillion financing gap when it comes to the SMEs. 2 trillion financing gap. This was a study done in ADB in 2023. And they are suggesting, so though our financial literacy, financial inclusion levels are high, we can say our literacy levels are high, but still there's a gap when it comes to the access to finance. So as a solution, so this study says digital finance can address this issue. So they are recommending in ADB in 2023, digital financing is the way forward. So what do you mean by digital financial inclusion? So we talk about access to finance, and then we talk about financial inclusion, but now the recent studies, researchers recommending digital financial inclusion. So digital financial inclusion means what? Providing underserved population with affordable and responsible finance services through digital means. So it can be digital banking products, mobile apps, can be platforms. So this is the way forward. So, and other thing, if you really look at, today we are in a technology-driven economy, right? With the globalization, the technology developments are taking place, right? So even SMEs can't run their same old business model. They also have, its time has come for them to revisit their business model and make sure their business models are in line with the technology development. We know technology developing at a rapid stage. And also, digital financial inclusion is the way forward. So therefore, the time has come, even for the SMEs, to really look at this. So there's no escape, even for SMEs, without going in line with the digital financial inclusion. So if you look at these statistics done in 2021, in Sri Lankan context, we have about 89% adults having an account, right? But we are actually, if you look at our neighboring countries, we are above them. So India is about 78%, Bangladesh about 53%, whereas Malaysia around 88%, where we are around 89%. But I want to take your attention to the row before the last. Has a mobile money account. In Sri Lankan context, we have only 3%. So this is the real issue we are facing. Of course, we have access to finance. We have access to banking sector, right? We have, for about 1,000, we have 100,000 clients, we have about 18 branches across the country. Also, we have 89% accounts, adults. But still, if you look at who has a mobile money account, so who can do a digital transaction, is very low compared to our neighboring countries. So whereas our Malaysia is about 28, India is about 10, and whereas the Bangladesh is about. So I say this is something we have to start thinking, right? So as a country, globally the technology is moving, whether we are really, as our businesses, moving with this. So overall, if you look at Sri Lanka's computer literacy is around 34.3%. We know our literacy levels are above 80%, but when you come to the computer literacy, it's around 34%. But if you come to I think there's another term called digital literacy, which is further below, right? So, of course, we know the rural sector is having the lowest, and the western province having the highest digital literacy, even that is around 40%. So this is why I want to highlight. So if we are moving towards with the digitalization, right? So this is where we have to really focus on how we make sure our SMEs are digitally literate and their computer literacy levels are high and they are ready to take digital financial inclusion, which is the way forward. So if you look at globally, over 1.7 billion adults, about 31% lack the financial access by 2017. But if you look at Sri Lankan context, we have about 90% populations have an account, but we have only 2% mobile banking account. The reason being, the study done in 2020, what they are saying is mainly due to lack of awareness. So this is where we have to really drive. The low adoption, the study done in 2020, Central Bank and the IFC, is mainly due to the lack of awareness and perceived irrelevance, resulting in the underutilization of digital banking products. So, being a bank, I know it's really challenging for us to drive the digital products, mainly to the SME segment. It's so many reasons for that. So, it's basically one thing is whether how digitally ready the systems, whether their business models are digital ready to accept these changes, and also how literate they are, right? So whether they want to, some of the businesses, whether they still want to run in the same business model rather than changing in line with the present context. So if you look at this, why digitalization and access to finance is a challenge. So if you look at technical skills country-wise, technical skills and readiness of the companies. So I took this particular study because this shows even countries like Singapore still at lower level. But if you look at countries like Philippines, Thailand and Indonesia and even Malaysia, so their technical skills and the readiness of the companies are very high. So that is where we have to drive. And same time, if the business is technologically ready, doesn't mean we can drive digital products, because same time we have to make sure the managerial agility of the companies as well. So if you look at that, the Thailand, Malaysia and Indonesia at very high level. So this is where what I see, which we have to drive. SMEs, the country, we have to make sure their technical skills are there, they are ready to drive the technology. And also, if you look at high enable zones, basically the European countries, the spend on digital products has gone up from euros 57 billion to 65 billion by 2022. And on the ICT has gone up by over 200 billion to, from 2018, over 90 billion to 217 billion by 2022. So this is the investment. This is the focus area. So I think as a country, if we have to drive access to finance and financial inclusion, digital finance and digital financial inclusion is the way forward. Because we can't have branches across the country. If you look at bank branch, if you want to form banks or branches across the country, which is highly highly expensive, huge infrastructure cost, right? But if you have digital channels to drive access to finance, so it will definitely will reduce, which will bring in the efficiency to the system. So this is what we have to focus. So in summary, I have to emphasize digital finance is bridging the gap to financial inclusion. So that will bring in increased accessibility. So even rural areas, it's easy to access rather than investing on the infrastructure. And also, this will definitely enhance the financial inclusion. So we can call this digital financial inclusion. And also, it will bring in the cost efficiency to the system. And also, when it comes to the credit evaluation assessment on the bank side, it will be easy because information and data is available in the system itself. And also, fast and secure transaction. So, yes, access to finance is a concern because if you look at the statistics, we are compared to our Southeast Asian countries, we are at the lower level because access to finance, which lead to the financial inclusion, that is going line, I think that will lead to the economic growth, so that is the need of the hour. But recent studies says digital financial inclusion, digital finance is the way forward. So we have to make sure as a stakeholders, the bankers and all other stakeholders, we have to make sure our SMEs are ready to take over this challenge. They are technologically ready to access this. And this is the message I want to give. Thank you very much.
Thank you, Indika. I think very important point that you made was access to finance is becoming digital access to finance, and also the ratios like branches per 1,000 population is becoming irrelevant. But you know, the question is whether the country has a digital ecosystem to facilitate digital financing. It can't be one-sided. So let's have that conversation during the Q&A session, Indika. The next speaker is. I think it's a very interesting topic. We have been talking financial markets and access to finance. So we have invited Rear Admiral retired YN Jayarathna, former Chief Hydrographer of Sri Lanka Navy, to talk about making maritime connectivity for finance and economic growth. Sri Lanka being an island, are we harnessing the resources around us? And he will be able to give us a better insight. You know, how do we do it in an era where, you know, we can make a lot of benefits out of where we have located. Oh, right.
Are we ready? Okay, right. Thank you, Chair. Ladies and gentlemen, good evening. So we are talking on towards Sri Lanka's sustained economic growth. In that aspect, in this seminar, in this particular theme, I'm talking about making maritime connectivity for finance and economic growth. So the whole idea of this session is how to make our finances and how to make our economy growth. So in this aspect, let me take you through a process how the maritime aspect come into play for this island nation. Ladies and gentlemen, there's a saying that government can build harbors, port and harbors, but whether to keep that harbor or whether to kill that harbor is decided by multinational companies. So what matters here is, while the maritime connectivity is centered on ports and harbors, it matters what is inward-looking things and what is the outward-looking thing. So let me take you to this slide. So let me explain this slide a little bit. So this is about our neighborhood. So here we are, Sri Lanka, in the Indian Ocean. So our neighborhood contains the world's largest population and the 5th GDP. And on the neighborhood on the Bay of Bengal, on the north of the Bay of Bengal, is Bangladesh, world 8th largest population, and GDP terms 34th, not that relevant. Coming to the Arabian Sea, on this side, it is Pakistan, world 5th largest population. So here we are. So this indicate our neighborhood is full of this much of much of consumer requirement. And this requirement comes through the maritime connectivity. So that is where we stand at advantage. So Sri Lanka is going to benefit it because of this maritime connectivity, because of this much of population is being served in this region. Now we stand at world 61st population and our GDP is insignificant. We are not a producing nation. We are a consumer nation. But our neighborhood consists of thrice our consumer requirement. So that is where our market really lies. So what makes us important? It is because of our ports. Colombo is our topmost, and within the top 25, it is because of the region. It is not because that we produce things. It is not our consumption, but it is our regional connectivity that make our harbors at a more prominent places in the globe. Then the two deep water harbors, that is Colombo South and Hambantota, has changed the entire strategic posture of merchant shipping. So these two harbors are going to change our destiny because they are in a position to take in any of the largest vessels in trade. So somewhere in 2006, 2008, 2009 era, the decisions were made. As a result of that, by 2009, we are having both these harbors operational. So let's thrive on these things. And let's not forget what is happening in the East African region. Now, in the East African region, there are many infrastructure development taking place. And when that happens, all those infrastructure support and logistics is being channeled through maritime connectivity. So if the China is the primary contractor over there, all things are coming from Chinese mainland, and when the Chinese mainland, when they've been shipped through oceans, obviously our ports are going to be the forward staging points. So these have a certain commercial value. These will carry certain geostrategic value also. Let's talk about these things. So from this slide, it implies where we stand. What is our strength? Where do we need to spend our time and energy into? What we need to invest on? Let's not forget about other island states, because all these island states on the Indian Ocean region is being served through our ports. So ports and harbors become strategic assets. They are not merely a commercial entity anymore. They are strategic assets. So Colombo Port and Hambantota Port is our two deep water harbors that is commercially important to us. And at the same time, it is not that the other governments, other neighborhood is not going to be staying there. They also invest on that. So we see Visanjim Port is being commissioned on the Kerala state. And we see Port Penang is being expanded. And there's another thing coming up in Galatia Bay. This is where the Galatia Bay is. And let me take you to, right, okay. It was connected to the Google Earth, but it looked like the connection is not working. So this is where the Galatia Bay is, in the southernmost portion of the Nicobar Island. See where it is. It is right on the main sea lane of communication. Now this harbor is going to give a good competition and at the same time a strategic concern to us, because all the East Coast Indian cargo will be going there for transshipment. This harbor is going to be, how it is going to be. This design is already in the internet. It is in their plan. So it will take another 5 years for them to build it. It is a deep water harbor, and it can primarily intended to be a transshipment harbor. So imagine the situation in the Bay of Bengal or the Indian East Coast cargo. Even the Bangladesh cargo goes to Galatia Bay. From Galatia Bay, they go into the main liners, and the main liners take it to the destination. and that's going to affect us. But it's going to happen in another 5 years' time. So we have time to do our homework and make adjustment, so we will be in a better position when it comes to operation. So these links, I have put it up. This will be shared with you. So when you go through these links, you will see how the others, how the neighborhood look at us. What are the arrangements made by the neighborhood for their survival, for their maritime connectivity? Now, there's no point of we are harping on things because we are not a producing nation. We do the simple transshipments, and through that we earn money. So it's very important that we understand how the neighborhood invests on this maritime connectivity. Then let's have a look at some of the assessments, some of the calculations, some of the predictions made by economists. Look at the South Asia, $122 billion. So when you look at top investor regions in the world, this is how some economic analysts are looking at it. So where we stand to benefit from this analysis. So it is important that we understand our maritime sector and invest on it, and at the same time be a collaborative partner for all the regional maritime connectivities. Then have a look at this assessment on Belt and Road Initiative. Look at the Sri Lanka, what I have highlighted. Their radiation region is SAARC and SAFTA, and radiation population is 1.6 billion. Nowhere in the world you have that much of people. And radiation area GDP is 2.3 trillion. Nowhere in the world you have that kind of a penetration. So it is no wonder that these are becoming our assets, our strength, and all these are connected through maritime. So that is why we need to have a fresh look on our maritime connectivity, understand the broad picture, and invest on it. So improving efficiency and port management, these are must. Building ports is a separate affair, port management is a separate affair. So let's understand the nitty-gritties of these things. So how are we going to benefit through that? It is one thing is nature, the tide, Vadadiya, Badiya. In anywhere in our ports, none of the ships has to wait for the high tide to come in or high tide to go out. Whereas in the Indian ports, it is the condition. The further you go in the latitude, the tide takes charge. In our case, it doesn't. So ships can enter at any time, they can go at any time. So that means our turnaround time is less. So with other periphery arrangements, if we bring our turnaround time much more lower, that is where the competition is. That is where the market is. It doesn't matter who invests on new port buildings. As long as we ensure that our efficiency is up to the mark and our turnaround time is lesser, and all will be coming to us. So improving port efficiency is a must. We need to invest on it. As I said that earlier, ports and harbors are strategic assets. So they need to be managed in that line. And it has to be an industry lead, because none of our government for the last, all these years, we don't see any visionary leadership coming up on port management except for Lalit Athulat Mudali. See, in 1977, with the change of government, when the JICA offered the port modernization program for then President Jayarathna, immediately went for Lalit Athulat Mudali wanted to have the ports modernized. At that time, Singapore was our strategic competitor, because Singapore never wanted Sri Lanka to develop harbors, so we become the hub status in the South Asian region. So this is the kind of a vision we need on maritime aspect. And our policymakers, politicians, political masters need to make decisions. Wise decisions and quick decisions. Because anything on maritime is to be taken, decision taken to be taken very fast. So with that, ladies and gentlemen, I will come to a conclusion. And this is a nautical chart. And this is the nautical chart representing the northern part of the Indian Ocean. So making this nautical chart on paper and on digitized format used to be my former job as the chief hydrographer. So hydrographer's job is to measure the ocean, put it on a scale, and produce the chart. So with chart, everything start with this. All the ocean management, ocean governance start with the charts. So that is why hydrographers matters. With that, ladies and gentlemen, thank you, and I can be contacted on these connections. Thank you, Chair.
Thank you very much, Admiral. I think it has given a completely different connotation to, the benefits that we can have through maritime. The opportunities are immense. Some of the things highlighted from the East Africa to South Asia to Far East have been, really encouraging. May I start the question and session with Admiral yourself to, give some insights to us. Obviously, Sri Lanka's location gives its advantage in having a maritime superiority. Can you enlighten us and the audience about any other markets or a country where maritime connectivity has contributed to a significant notable economic growth? So that we can take this as an example and learn from it and to understand how can Sri Lanka adjust. You made few interesting points. You say that yes, government can build ports, but it's up to the people and the multinationals, how we can get the optimum use of it. If you can enlighten a little bit, Admiral.
Okay, thank you, Chair. Let me explain it in this way. Let me take a domestic example. Now, Hambantota completed in 2009, phase 1 was completed, and it was not making a significant progress. The moment we changed our Petroleum Act of this country, we see the bunker business is making a surge ahead. It is because our legislator has stopped, or there was a monopoly for Petroleum Corporation to run the bunkering. So the moment that was removed, then the bunkering started going on. And looking at the Trincomalee, now Indian Oil Company took charge of 15 of tanks in the tank farm in Trincomalee, and they ensured that all the East Coast ships that goes to Singapore are fueled in Trincomalee. So as a result of that, Trincomalee Port Authority revenue has gone up. It is because so much of bunkering taking place off the Trincomalee Harbour in Back Bay, in Outer Harbour, because none of the Indian ships now get fueled at Singapore. They fuel at Trincomalee, whether they are on the way to Singapore or whether they are on way from Singapore. So this is about the connectivity. Then looking into the broader picture, I would say sometimes back our strategic competitor was Singapore. It is because of Singapore that we couldn't build our harbors. And they ensured that we remain at a certain level, not to go beyond it. But we went through that. Now, our strategic competitor, as we are not a producing nation, so our strategic competitor is now everybody. We have been benefited by Indian market, Indian production. So India, for me, I would say it is an opportunity. So let's use that opportunity very wisely. If you think India is opposition, it is opposition. If you think India is opportunity, it is opportunity. So let's use it wisely and ensure that our connectivity is ensured and our economy, our finances are on a trajectory to go up. So looking back to the Arabian Sea side, the Omanis built Salalah, a deep water harbor, and that captured the complete Arabian Sea market. So all the cargo that is destined for Pakistan, Gulf, get unloaded in Salalah, and Salalah as a deep water harbor is a hub port to that region. And they also serve the east coast of Africa. So it is up to the industry to expand on that thing. It is, this is market driven, and this is geography driven. So although we are geographically advantaged, just because it is so, it's not going to benefit us. We need to have a vision, affinity, and what to do with it.
Thank you, Admiral. I think a little bit of a strategy and the focus and the consistent policy also matters, I guess, in harnessing that. So let me ask a question until you get some questions from the floor. Let me focus one question to Dr. Anil to you. So we spoke of certain financial market contributions that can be made to ensure the economic growth is there. One important thing that you discuss is about exports. Export focus has been a key strategy since we have seen foreign currency scarcity maybe a couple of years ago. Even the banks struggled to find foreign currency to support imports, Sri Lanka being predominantly an import-dependent country. So one material issue remains is the financing of small timers involved in exports. What would be the ideal macro environment in your view if we are to sustainably grow this segment of our economy, which obviously contribute to the economic growth? So this has been a question that have been discussed maybe many forums, but still we struggle to a certain extent find a more formidable solution. Maybe we can come up with some suggestions. There may be ideas that can implement. Please contribute your ideas, Doctor.
Thank you, Damith. I think what I see for the sustainable economic growth of the Sri Lankan economy, one of the priority areas or prime areas would be the exports. Now, if you look at Admiral Jayarathna's presentation, around us there's a huge market, including India, China, so a lot of market potential is there. So whatever we produce, I think we don't have internal market to consume to that nature or to that extent. So only the exports would be the market out there. And also to basically empower the economic agents, especially the small timers or the SMEs or the micro enterprises. One of the way outs would be promoting the exports. So I take your questions in two parts. One thing, basically, what would be the macro environment? Second, what can be done for the small players in terms of for promoting exports. Now, in terms of macro environment, it is really essential that we should have a stable economic environment. As I already mentioned, three things: monetary stability or the price stability. Other thing, fiscal stability. Third one is the financial stability. So I take two things out of this. First one, the price stability, which means low inflation environment for two things. First, to be competitive in international markets with as a low-cost producer, we should have low prices, obviously. That will lead to basically competitive wages and also competitive prices. Second, that will create an environment that we have low interest environment, as I said. So without having, I think as a banker, you would know the key variable for the customers, for your customers to basically approach the bank would be the interest. So if you don't keep interest rates at low levels, at competitive levels, I think export business or none of the businesses will not be basically achieving their potential. So that's one thing. Second thing, from the viewpoint of the central bank, what we think to promote the exports, there should be stable external price as well, which means our exchange rate should be competitive enough basically to support the export sector. In other words, we have been basically testing or basically experiencing a lot of exchange rate regimes. In my view, this is my personal view, not the institutional view, which we have not basically catered to support the external sector in certain regimes. So what we have to do basically some competitive exchange rate, some flexible exchange rate for us to basically in terms of shock areas, shock periods to absorb and other periods to have to support. So that's the second thing, some exchange rate stability and that flexibility is required. Third, out of financial stability, what I would like to see basically the banking sector. So the banking sector, I think we are one of, I think in regards to emerging countries, that's the reality. We are bank-based economy. So whatever we say and do, basically the banking sector is the priority sector in terms of financing. So I think the banking sector stability, their engagement in the economy is really essential. Those are the three macro factors I would like to highlight. The second part, what should be done in terms of SMEs, especially the small players in the economy. I think there are a lot of issues in terms of SME. Now, and also we talk about SME, that doesn't mean we have to forget about the, the big scale or the corporate scale producers as well. So while taking care of them, we have to focus on SMEs. Especially, I think I actually had some discussions with our regional development department also, what their views also. We have a problem in terms of accessing finance. I think Indika would highlight in his deliberations also. Now we are basically, especially the banks or the financial institutions, we are looking at a model like collateral-based lending. So there is a kind of a idea or discussion going on. Why don't we basically promote financing in terms of project-based or cash flow-based lending? Because we know these SMEs, micro institutions they are lacking with collaterals. Second area, I think they don't have proper records and all that. So I think in terms of record keeping, awareness, accounting, all these are required to support the SME sector if we basically drive them towards an export-oriented entity. Third, another area, I think, under these securities transactions, that we are looking at some movable property registers. So they are also required, because I think other than other type of collaterals, there could be some movables that they can use in terms of their borrowing habits. So those registers have to be developed. I think there are some legislative enactments and also discussions going on that basis. And also another area, still I think even we are trying to support the SME sector, their banking habits are also, I think, low. I think Indika would say SME sector's banking habits are also, I think we have to inculcate a culture that they are going through the banking sector as well. Not only the banking sector, there's non-banking sector also. We have a large finance company sector as well, like 8-9% of the financial sector. So these are also have to be considered when we promote exports and financing export in terms of supporting the growth.
Thank you, Doctor. I think that opens me a question to Indika. So you spoke of digital inclusion. So a lot of banks are pushing digital products. And also we have seen some parts of the world, like say if you take Africa, so digital penetration is very, very high. So what, in your view, apart from the confidence that is built through the digital financing, people, at most, they would like to come to a bank physically and ask for a facility rather than opting for a digital product, right? What do you think, why it is not getting traction? Is it the behavior? Is it any other thing among SMEs? Why this digital financing, digital inclusion doesn't get a traction?
Thanks, Damith, for the question. I think the key thing, all the stakeholders, what we'll do is make sure our SMEs are digitally ready first. Because we see even after pandemic, a lot of businesses have re-looked at their business models. But if you look at the regional level, some of the small SMEs, still they haven't. So I think it's a blessing in disguise where the pandemic came, where people start talking about the digitalization and the technology. But still it haven't gone to small scale SMEs yet. So first thing what we have to do is, I think, especially including the bankers like us as well as all other stakeholders, we have to make sure the regional SMEs are ready for this. So there are so many reasons, reluctant to adopt. So there is a fear factor, whether technology is the security aspect, right? Even I think one of the studies they show, one of the key things, key challenges or the key issue they see is as whether technology, so digital adoption, whether that is a secured mode of transaction. So then we have to give that confidence to these, especially the SMEs, and make sure they are digital ready for this. And then, of course, we can address our access to finance and and finally financial inclusion both. Because even earlier question, when you come to the exports, I think SMEs contributes in the country is only less than 5%, whereas India, the Malaysia, the Southeast Asian countries over 30% contribution to GDP through exports, SME segment. But in Sri Lanka, it's less than 5%. So while making them technologically strong, savvy, so we can address this as well, then they can target, I think then the globally the markets are open for the SMEs also to capitalize on. I think we have to make sure our SMEs are technologically ready for that. The awareness is a key for this.
Thank you, Indika. Any questions from the audience? We can take it up, maybe 1 or 2 questions, or else time is almost up. The red notice is there. Sorry, there is one question.
Yeah, I think one of you gentlemen said it was important to stabilize, keep the market stable. Now I have some concerns about that because interest rates and exchange rates are items determined by the market. They can only be influenced by the central bank. So practically it's sort of impossible to fix the interest rate or fix the exchange rate because, for example, if you try to fix the exchange rate, the trade deficit could keep on ballooning and the money could sort of go out unless you allow the rupee to depreciate if the trade deficit is too high. So I have some concerns about what you said, that it's important to keep rates stable because rates are the ones that are supposed to go up and down based on the changes in the economic conditions.
Can I? Yes. I think it's exactly right, which is the truth. What I said was basically not to fix these variables. I think if you try to fix any of these variables, economic variables, what you are trying is basically intervene in the markets and also the economy, and you are trying to make it a kind of a artificial balance. And we know in basic economics also, if you intervene in the market, that will create distortions. What we have to do actually, we have to implement policies, create environment for these variables to be stabilized. That's the idea. For example, you can't bring down interest rate by force. You can't keep interest rates stable by force. You have to create the environment to make it stable. So which means inflation and interest rates are linked. So if you can bring down the risk premium by way of bringing down inflation and all other macro factors, stabilizing, that will help to keep the interest rates low. The exchange rate also very similar. Exchange rate is actually an outcome of a lot of variables, as you said, the current account, the external sector transactions, all that. So we have to create an environment for these variables to behave in a stable way. That's the point. Not to artificial stabilization. We have seen the cost of artificial stabilization in many instances.
Thank you, Doctor. I think time is up. Thank you for that question, and thank you very much, OPA, for opening this session on the financial sector role for economic growth. Thank you very much for the speakers, Admiral Jayarathna, Indika, Ranaweera, and Dr. Anil Perera from Central Bank. And thank you very much for your active participation. Thank you.
Let's put our hands together for our panelists, ladies and gentlemen. I'd now like to invite on stage Mr. Tisera De Silva, General Secretary of the OPA. And we'd also like to invite Mr. Sarath Gamage, our President, Mr. Sujivalal Dahanaika, President-elect and the Chairman of the Conference Committee, to join us up as we present tokens to our speakers as well as the Chairman of this session. So let's get started with the first token being presented to the chair of this session, which was all about the role of the financial sector in economic growth. The chair for this session was Mr. Damith Pallewatta, who is the Chief Executive Officer of Hatton National Bank PLC. We have his token being presented right now. Let's put our hands together, ladies and gentlemen, for Mr. Damith Pallewatta, Chief Executive Officer of Hatton National Bank PLC and the Chair of our Session 4, a role of the financial sector in economic growth. We thank you very much for joining us here and being our Session Chair. We'd next like to appreciate the presence of Dr. Anil Perera, who is Director of Domestic Operations and Deputy Secretary to the Governing Board at the Central Bank of Sri Lanka. He spoke to us about the role of financial markets towards a sustainable economy. Thank you very much, Dr. Anil Perera, for joining us on board this session. Let's put our hands together, ladies and gentlemen, for Dr. Anil Perera. Next up, we'd like to appreciate Mr. Indika Ranaweera. He's Vice President, SME, Middle Marketing and Business Banking at NDB, and he spoke to us about access to finance for small and medium enterprises. So we appreciate your presence, sir, Mr. Indika Ranaweera. We have a token of appreciation for you on behalf of the OPA. Let's put our hands together, ladies and gentlemen, for Mr. Indika Ranaweera. And our final speaker in this session was Rear Admiral Y.N. Jayarathna. He was a former chief hydrographer for the Sri Lanka Navy, talking about making maritime connectivity for finance and economic growth. We thank you for your presence, sir, and please accept a token of our appreciation from the OPA. Put your hands together for Rear Admiral Y.N. Jayarathna. And with that, we say thank you very much to all of our dignitaries on stage. You can feel free to take your seats in the audience. Ladies and gentlemen, we do have one more segment coming up right after tea break. Tea break will be for 15 minutes, so we hope to see you back in your seats by 4:50 p.m. All right, 4:50 p.m. Let's get started at 4:50. Thank you very much.